Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So in today's lesson to start the show, I'm going to go into RSI and I want to give three different ways that I think you can use that on top of the MACD and the ADX. In other words, I'm not looking to replace those. I just want to use the RSI to supplement those indicators and provide some additional entries. So let's look at the agenda. So yeah, the three different ways I would look at using RSI in addition to or in conjunction with MACD and ADX. First is the pullback trade. So I've got three different examples and three different stocks. So I'm going to do a pullback trade. I'm going to confirm a breakout pattern, which I think is important at times, especially when the market is not quite as strong or maybe showing a lot of failed breakouts. And then thirdly, a second opportunity trade. If a stock is moving and is already trending, sometimes this provides a quick entry to get in along the way. Okay, so the first example I'm going to use with this RSI is this pullback trade. And I've got Microsoft up. And what I want to show here is I've actually got the weekly down here and the weekly up here. All right, upper left, bottom right. And I wanted to keep these charts up because I wanted to show how we want to be on the lookout for strength in the momentum, right? I mean, we've got strong ADX confirmation, MACD and ADX confirming the up move, and then we get this kind of corrective pattern. And when the 18 starts to flatten out, it gets a little bit more difficult to look for a pullback trade using my 18 and 40. But if you notice, the 40 is still rising steeply, and the 18 is actually flat. So what I like to do in these cases, especially when the MACD, and let me zero in on this for a second, when the MACD is kind of working its way back down towards zero and we still have a lot of strength in the ADX, and sometimes the ADX will be low at this point, but we've got a lot of strength here, I want to look for entry somewhere down in this region. And what the RSI does is it offers that signal. Now, you might want to go back through some of the lessons I've done on RSI already. Again, this is out of my course. I do a special section. It's not in my book, but I did put this in the course. As I created a section for RSI. And what we're looking for is where the RSI 20 is holding the 50 level and the RSI 5 comes down. In this case, it actually gets oversold, but we just needed to get back down under neutral. And the other thing that happened here that was interesting is we got our pullback and then we rallied up and then we actually made a slightly minor new low and we got divergence here. Now, there really was an entry here using RSI because once we turn up and form a higher low, we can take this entry. But using the strategy out of my courses with the stop, I use an ATR stop. Using that, you would have given it plenty of room. Even if it came down and undercut this low a little bit, you're not getting stopped out. But if you didn't take this signal and you were waiting and maybe expecting a little bit more of a pullback, especially based on the way the MACD had overrun its signal line, you would have seen this divergence signal after a deep oversold reading. And then the turn from here is really the next buy signal. So I find this to be a really good, it's a clearer cut signal when you're trying to find entry using the MACD and ADX and the price pattern with the moving averages. Sometimes it just really shouts at you when you look at this RSI. All right, the second example is when we break out. Look at this base breakout in American Express. Now, what I teach on breakouts is that if we make an extended run to break out, you see this breakout? We were up like 7 out of 8 weeks in a row. It's not ideal to buy something that's overbought. So what I typically like to do is let it break out and then look to buy the first higher low. All right, we've got a lot of strength in the momentum after a low ADX condition. So we want to do that. Now, what I look for, and actually what's here now is a daily chart. All right, this is actually a daily. And what I'm looking for when we're testing the breakout level is a lot of times I'll just go down to the daily and look for our RSI signal. Okay, we get our little RSI signal. There was one prior to the breakout, but in this case, I think I would have let this break out and then play the higher low, the RSI buy after a deep oversold reading with the RSI 20 staying well above 50. This was a very nice buy signal. And that is a great way to get in on a breakout pattern. And it sort of confirms that it's not going to be a false breakout where you break out and then you sink right back into the breakout area. So this allows for a little bit more confirmation in those situations. All right, the last example is we've got this stock that's motoring along. It's broken out. Look at the strength of the momentum. Look at how we're getting confirmation in both MACD and ADX. And we've got rising moving averages, right? Now, as I teach, you can always go down to the smaller time frame. And if you notice the way this played out, we had a little overrun. And what I teach is that typically what we do is we get a rally up, which this did, and then it comes back down and tests the area again. So it did that and then turning back up. Now, you could probably get entry off the daily chart, but sometimes it's just simpler to go and look for the RSI, classic RSI buy signal where we've got rising 18, sitting on the 18, RSI 5 drops down into neutral, under neutral, right? And the RSI 20 stays strong. We have no sign of divergence whatsoever. We can buy this simple pullback as it makes a higher low. So the entry is using price making a higher low. When we have that, we'd have entry on that. So those are three ways that you can use that. And if you notice, I mentioned ADX and MACD in every single one of these. So it's not necessarily used to replace, it's used to augment them. And I think it can be a very useful tool to use on top of that. So if you're enjoying the content, hit that like button and also subscribe. Also, if you'd like to learn more about some of the techniques that I talk about in the lesson and throughout this show, you can go to rabelstockresearch.com/book to get more information. I'm offering the book at a discount right now in a PDF format. So check that out. Let's go ahead and get into the individual symbols that came through. All right, let me just spend a quick minute here just talking about the ACP. So what I've done is popped open this window market summary. I've talked about this in the past, and I really like this little cheat sheet here in terms of the heat map. And you can see with the NVIDIA earnings, so the large cap growth is leading the way and just crushing value today. But I like to look at, this is essentially what I'm looking at when I come into this. I'm comparing this to this. I like to see small cap value versus large cap growth. It gives me a real good feel for what's really taking place. You can see there's really nothing going on in small cap land. It's all being focused in on the big names. So now I've talked about this this market summary page in the past. One thing I have not brought up is the market movers section. And I like looking at this because it lets you define your universe. Now, most of the time, a lot of these softwares, they just put all the stocks out there. I mean, you might be able to divide it between NASDAQ and New York Stock Exchange or whatever, but I can pull in the S&P and I can see what's happening here to start the day. Obviously, NVIDIA leading the way. I can sort this. We can see NVIDIA, and then it's a semiconductor day, obviously, so far. Now, it's early in the day. This is 20 minutes into the open, so we could see some changes, but I find it kind of interesting the way you can see this. And then you can go to the top gainers as well. And again, you can see it's a lot of these semis in there. And then go to the losing section. We've got Walgreens coming out of the Dow. Some defensive stocks kind of underperforming. Then actually gold must be having a bad day because Newmont is really off today, or that could just be Newmont. But I'd go and check gold and see what's going on. So so that's kind of a cool little aspect to this program. I can do the small cap universe as well and really kind of zone in and see what's really taking place there, who's winning, who's losing. So it's a nice little quick way to see what's happening to start the day. See if there's any big stocks moving based on earnings one way or the other. All right, let's go ahead and start with this. Now, I'm actually looking at the S&P real briefly because I want to follow up on the lesson that I just did on RSI, because there's a couple things that I think could be helpful in using the RSI. Now, I've just got the daily SPY up, and just so you know, I don't typically do the S&P on this because my Friday morning video for YouTube, Invest Like a Pro, is based on, I basically go through the S&P in depth and do all the market conditions and everything. So if you have an interest in that, I would check that out tomorrow morning or Friday morning. So, all right, now look at what's taken place. And again, this has been on the daily chart. We haven't had any buy signals using the RSI the way I do it off of the weekly. But look at all these signals that have been taking place on the daily chart. Now, one thing I want to point out here is that we get a move here and we get a pullback. Actually, even before that, we get a move up and then we pull back. We have the one bar down and then we go to a new high, and RSI diverges here. Okay. Now, when I see that, I don't typically want to take the next buy signal on the RSI. All right. I want to see kind of what happens, because in a lot of cases, this is the start of a correction back down to the next line. In this case, what it did was it formed an ABC, but it was more like a sideways pattern here. And we get another signal here. Right? So this would be more appropriate, the signal. Now, when divergence fails like this, when we have divergence, I basically refer to it as being broken. When divergence is broken, I no longer worry about divergences anymore. I'm not going to let that hinder me. Like we got another divergence here. You see how this went to a lower high with price going to a higher high? I'm not thinking about that anymore. Once we're so strong to the upside that divergence has no effect on the price action, then I'm waiting for a break. And that's why I continue to say, my subscribers, I'm waiting for a break of the 18-day. Until we break the 18-day, I don't really think it's necessary to try and call a top in this or anything like that. We've gotten close, but it keeps respecting this line. And until that changes, we actually want to continue to go down and look for these signals, repetitive signals that have taken place here on these little checkbacks. Now, these are obviously little swing trades, but it just gives you a feel for how this indicator can help you. Okay, let's start with NVIDIA, just because of how newsworthy it is. And I do want to take just a quick look at the hourly chart here, just showing how we opened the day here and they tried to push it down to start, right? It made a little check back move below the open and kind of came back to the breakout area and then immediately turned back up through the open to the upside. I mean, this is very bullish action. Okay, I just like to go and look, see what the volume looks like. Obviously, big volume, and we're at a new high, pretty much near the highs of the day. So I think this is a really good, at least from a short-term standpoint. I mean, it's early in the day, but still, I would say that if we were going to get some kind of a bad reaction, like a selling on the news type of reaction, I would think that we would have a little bit different way in terms of the way it opened. Now, it is getting extended, obviously, so I'm not telling you to go chase and buy on this type of news or anything like that, but just be aware that we don't see the type of volume that looks like climatic volume. This is actually steady influx of bullish volume, and we're not at a point where I would consider this to be ending run. Okay, like this is it. Like so we need bigger volume and maybe even a little bit bigger move to the upside if we're forming some kind of a big buying climax. All right, let's look at the QQQ here, and it's actually somewhat of a similar picture, although if we look at the monthly, we've got a solid trend. Not overbought, it's just solid. It is up 4 months in a row. I think we're due for some kind of a pause or a pullback, but we've got MACD and ADX confirming this trend on this time frame. Then if we go and look at the weekly chart, we've got a solid trend with parallel moving averages, right? The 18 and the 40 moving up at about the same rate. That's a solid trend in place. We've got MACD and ADX confirming the action. Remember, we always do a reset when we go through a corrective pattern. And so since that time, green DI has been confirming, MACD has been confirming. I mean, this is actually the first time we're getting a little mini divergence in green DI, but we're not seeing anything take place in the sellers yet. The red DI is still pretty weak. So the time frame that seems to be in control here is on the daily chart, because we're getting the checkbacks into the zone between the 18 and the 40 on this time frame. And what we're looking for is are these opportunities, and we want to go down to in this case, we'd go down to the hourly chart for our entries. All right, so we're not really getting those opportunities on the weekly, only on the daily. All right, so you just have to understand your time frames and how to play these. But as long as the momentum conditions are still okay, I think you can keep doing that. Let's look at the IWM here. We've got a pretty good looking pattern, really, when you look at the way this is basing out, trying to turn the corner. It's a low ADX condition with a MACD turning right around the 0 line. We don't have any momentum. The daily hasn't kicked in again, and we have low ADX condition on the weekly. So we need some strength to the upside. It looked like last week on the close above 200 that we were actually going to get this moving. But what didn't confirm was this RSI line, right? This RS line. We need this RS line to cross above its moving average. We really needed to come back up through here, but at a minimum, we want to see it back above the moving average and sort of proving itself, maybe even coming back up on a price basis back above this prior high. If we see that with RS confirmation, then I think we can start to feel a bit better that maybe we're going to get a little bit better expansion in the number of participants in this move. Okay, let's look at the SMH, because I figured I would just take a quick peek and see how different this looks than the NVIDIA chart or some of these stocks like AVGO. Now, I mean, it's extended, but it's not as extended. It had a really nice, actually, little cup and handle buy signal a few months ago with very strong little pinch play here, which kicked in late last year, and now we're getting momentum confirmation. Again, we've got a strong trend on the weekly. All right, we're in a good position here. The problem is we're not checking back to the weekly line. So again, the signals are taking place on the daily. Now, one thing that I'll tell you about the S&P, about the QQQ, and about the XLK, and about this is that here's where they turned up. Late last year, the 18-day turned up. Now, we broke this line here, but it didn't roll over. We broke this line here, and it flattened out, but it never rolled over. We broke this line here, and it's still rising. We need, if we're going to see a turn in these, we're going to need to see a break of the 18 MA and have that 18 MA roll over. When that happens, then I think we have more risk of coming down towards the 18-week on all of these indexes. So we just want to be aware of that. It might happen in one and not in the other, but you want to be on the watch and keep an eye on that 18 and see if it starts to roll over. If it does, then the risk is increasing on that specific index. So keep an eye on the S&P, keep an eye on the QQQ, and keep an eye on this semi. Let's take a look at Adobe now. So Adobe actually did break in a violent way, broke its 18-week on its earnings. Now, this had a really nice turnaround. We had a 1-2-3 reversal where we completed the 1-2-3 here right around 400. Early this year, and we've had a good run. Early last year, and we've had a good run. And then we started to show a little bit of sign of momentum loss here, and now we've got a violent break of the 18. Now, this is the first break of the 18. This is not really a break of the 18. We tested it here, and now we're getting a violent break. So I'm expecting this to go through a corrective pattern now that's going to take a few months, probably 2 to 4 months, something like that. Maybe work its way back down to 500 and let the 18-month lines work its way up to that level. But I think price and the 18-month are going to meet up again. That's how I would be looking at this. So I wouldn't be in a big hurry to buy this dip. I think it's going to take more time to get things going again. Let's look at Alibaba, because the monthly chart seems like it's starting to stabilize. It had a big down move, rallied back up, and now we're testing this area. It looks like the sellers have kind of dissipated here, and so we don't have a lot of downside momentum in this trend. We just don't have any upside. And the problem is that I don't want to look for the daily for this. I want to see it on the weekly chart. I want to see strength to the upside, maybe even working its way up to 100, but I want to see green DI break out above all of these levels, and then I'll look to play the first pullback. If we get that, then I think we've got something definitely worth watching. I mean, it's a nice base that's forming, and it's very quiet. This is a low volatility base. We've got the ADX in a low position. We just need strength out of this time frame before we want to do anything. Now let's look at the opposite end of the spectrum, right? We've got CyberArk, and this thing is, and this was one of the stocks that I had recommended to my subscribers. It was in my review list here, right in this area last year, where it was coming out of this low ADX base pattern and then showed a little bit of strength here. Now we've made this big run to the upside, and the question becomes, if you took profits in this, so I actually like to take profits along the way, partial profits, and trail a stop. And if I do that, I'm still in this stock, okay? Now, if I took profits on this big up move, now I'm kind of looking for a new entry. And my suggestion is that this probably is going to consolidate a little bit after the big move to the upside and the big drawdown. Expect a little bit more consolidation. I don't think I'd be in a big hurry to be a buyer on the daily chart. I would wait for this to consolidate a little bit more on the weekly and then maybe look for an entry somewhere down the road. But I would think it's going to take a month or two before it's ready. Let's look at IBM. Now, here's the interesting thing. I mentioned the American Express breakout and then the daily little dip with the RSI. Well, this did basically the same thing. It was so quick, though. It was a little quicker than I was actually anticipating, but just a huge breakout, something I've been talking about a long time. A stock like this, getting through this 150 mark is, I think, incredibly important. So now we want to go to the RSI and see if we can't get a second opportunity. And we're going to need this RSI to drop down under 50, right? And that on a closing basis, weekly closing basis, and then look for an uptick from there. You can go down to the daily chart for entry once that happens. Let's look at the COF. So these guys, I really like the look of this pattern, right? I mean, they're moved to the upside. We've got the 18-month rising now. We've got signs of green DI. And again, that's on a monthly, but it's got a nice base of support underneath it. If we look at what's going on the weekly, we've got a lot of strength to the upside, and we're holding well above the breakout area around 120. I think if we can get a little bit of a dip, a little closer to the 125, maybe something like that, I would be watching this for that would be kind of like the next opportunity I would be on the lookout for. And it'll probably coincide with the RSI 5 dropping down under 50. So something we want to use to confirm is if we can get that RSI 5 down towards the 50 level, then I think we're in pretty good shape to look for entry, maybe on the daily chart or something like that. All right, let's look at CLS. So we've got another one of these technology stocks, electrical components, kind of skyrocketing. It's up huge today, about 10%. It's made a big run. It's getting extended. I mean, we're looking for volume explosion at this point to show a sign of climax, okay? I mean, I would be taking partial profits along the way. I don't really see this as an entry point. I don't think there's any entry point here until we pull back. But it doesn't look like the move is over. It looks like the trend is still pretty strong, and it doesn't look climatic at this point. Okay, FCX was just kind of interesting. We're talking about all these stocks exploding to the upside, and this stock is doing nothing. But let's talk about what it is doing. It has formed an inside year. So that was last year. And then here's 2022. You see how the entire year of 2023 was inside of 2022. So we're looking for a breakout pattern. That's what we're waiting for. You got to be patient in this. But I think based on the way the MACD is playing out, I'd be looking for an upside move here. Look at the TT, another one. And a lot of these industrial stocks have paid pretty strong moves to the upside. I mean, we've got a pretty extended, look at how extended this has gotten from the 18-month. And it's also getting extended on the 18-week, but we've got good momentum confirmation. So not looking to be, it's probably too early to sell, too late to buy, too early to sell is the way I'd look at it. I mean, if you're a trader, maybe you could play this little breakout pattern. But for the most part, I think we want to watch for the next pullback towards the 18-week as the next entry. Thanks for watching today. If you have any requests, send them to stocktalk@stockcharts.com, or you can just post it in the comment area under the video. Also, if you have an interest in learning more about these techniques, I would suggest going to my YouTube channel, which is Invest Like a Pro. Have a great week, and we'll see you next time.